is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. And, man, getting some snow up north, huh? God, I wish I was up there. There's going to be a decent little snowfall. Little. Let's take a look at the dollar. All right, so we talked yesterday and the day before, actually, about not really wanting to get long this thing anymore. And coming up into the 165, I'm kind of getting in Tom's camp here, even though that's our daily, even though on our weekly, and I can't show the scanner because we're adjusting it right now, and I've got a million different versions up. But we'll try to get it up before the end of the hour here. The weekly, you know, this is kind of the classic. You got to just kind of start taking a shot here. But again, I'm just not so sure this is the time to be buying this. I think it might be much better served to just kind of wait and see on the long side. I mean, the target in my mind is going to be around 97 on this pullback. Here's the daily again. You got some resistance on that little weekly bounce, just kind of customary little trading opportunity there. But here's a daily, kind of been trailing down. This 99.60, 99.40, if this is broken, I think that's going to be the decent trade on the short side, even more so to possibly add to it to get back in the fair auction, kind of like have that weekly close. It would just, in my mind, be awesome today and tomorrow for this thing to migrate down and get a weekly close below this 99.63 area. So I'm just kind of waiting and seeing. There's no reason to always be in every instrument, so it's kind of something I'm just monitoring right now. All still, you know, that fake out the other day, I'm still looking at this from the long side. I like the dollar coming in more. That obviously wouldn't be a terrible thing to be long gold, or excuse me, crude or any other commodity. So we've talked about that, but let's just kind of review the levels. That was crude, that 52.32, I believe it was. Big number there to base kind of pick battles around. Here's gold, just really not at all acting like it wants to come off of these 1236 areas. So we passed on that on the short side. We're just kind of in a wait and see. And again, if the dollar does come off, a lot of these commodities are just going to pop, in my opinion. And gold has been kind of looking like it wanted to be on the launching pad up here relative to what the dollar had done recently. So just kind of passing on that right now. And you're going, wow, what are you not going to pass on? God, how about being short the S&Ps? Here we go. Here's the VIX. Again, you know, just historically at low levels here. And when people start on the TVs, they start going, and they're always late to the party. It just kills me how they jump on the bandwagon so late in the game, and you hear these people going, oh, the VIX really should be at 8. That's when turns usually happen. So keep that in mind. I'm still looking for an explosion in volatility on the S&Ps. It's been a waiting game. Here's today's movement. We've kind of eclipsed recent highs. This is our daily. Hadn't been a lot of reasons to be short outright here. I've still got a couple of puts on, just lottery tickets. They continue to get slowly eroded, but again, just hanging on the strangle, long strangle that we had before, where we kind of had made some money on the upside, and now that the puts are kind of coming in, but not a lot of risk on there. You definitely have a defined risk, and it's a lot easier playing that game right now, I think, than just being short the S&Ps in general. And this thing doesn't have to be in a situation where it's gone too high too fast. I'm just kind of looking at all things considered and waiting patiently for that type of move if it happens. If it doesn't happen, again, you know what your defined risk is. Here we go. Let's take a look at the Shanghai. This is something I've been really pounding the desk on the long side, getting across the top of the mountain here and getting a weekly close above 3,400 is just going to, in my mind, take it higher up into 35.21. I like how it's been acting lately. Here's again the daily kind of breaking out. Got across that POC on the weekly, but still not looking at this from the short side by any means. And you got some China A shares ETFs, I believe, that are even advertised on TFNN. You might want to take a look at it. I think it's two or three times China A shares. Actually, let's take a look at one of them. CHAU. That's 2 times bull shares. I don't think you have a bad situation here. On the buy side, you had a little bit of a pullback. Remember, this is kind of magnified, but taking a look at that CSI 300 CHAD. Let's take a look at that one. That's the bear shares. One time. Let's take a look at the 30-year really quick. Been staying away from these treasuries. Still, I think that's the play here. Here's the daily. Excuse me. Let me get the daily up here. Here's the daily. Just want to, make of note that, we have gotten up into the top of it. We talked about this being just a range, not showing a lot of direction. Don't see a lot of leverage either way for kind of backing in and getting your teeth into a long-term move type situation, big risk reward. That's just not there on the treasuries right now. And as you can see, we hit the top of the box on the daily and backed off. I think yesterday we hit, what we hit here? 153.21. The high is 153.18 on the top of the profile. And we backed off here. So I think we're just going to swim around and kind of fall back into the 152s of the world on the 30-year. A little bit of a trading opportunity at 153.18. Still think we can head lower on that. Let's take a look at a couple of the usual suspects here. Silver, talked about staying away from this on the short side also. Here's the weekly. And some weekly closes on gold and silver above these profiles. And the dollar coming off a little bit is going to possibly take these things to a new level. I know they've rallied pretty decently lately, but they can go higher. This is my opinion on those. We want to take a look at the XLF. This has been something I've been paying attention to. We've got a lid here, 2387 weekly unfair highs. We're trading about 2345 right now. I want to take a look at Goldman Sachs within this group. So here's the weekly on Goldman Sachs. I'm looking for this particular stock to break below 232.50 and just waiting patiently on that. I don't know if there's any big time leverage on the XLF in general right now either way, but kind of looking for Goldman to break here. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's take a look at a couple more banks here. Just going to go down the usual suspect list here. Citigroup. Now, this is, I know you guys can see this, but this is a really good example of if you're looking to trade if you think the banks are criminals and all that kind of jazz, and they should be cut in half their share price. You know, a lot of those banks and the XLF in general that we just looked at were just kind of hanging around all-time highs here, or recent highs. And a lot of the stocks we looked at, the JP Morgans of the world, the Goldman Sachs, they weren't exactly in a situation that looked very attractive on the short side. But Citigroup, you know, this was one we looked at previously that had broken. This is our weekly profiles on Citigroup. We broke. It's not the strongest stock in the XLF. And this would be, you know, this past week, in fact, you got a chance to play defense here. This would be the more, I guess, the smarter way to short the XLF is to find an instrument that, again, that's already raising its hand and saying, hey, I don't want to be bought, and there's some technical damage here as far as profiles, and let's play this one on the short side instead of trying to, you know, sell the one that the concept will be it's gone too high to short. So again, we're looking at this relative weakness versus relative strength type of situation. Now the market, and there's better shorts out there than this, but the market, you know, having these moves in one way really clarifies things. We talk about that all the time, and I'm sorry to bore you to death with it, but you know, successful trading is supposed to be boring. Somebody told me that a long time ago. I've tried to keep it always in the back of my head, and you know, migrate into these things that, all right, you know, this one's not looking a little sick here. And if I'm going to look at the XLF, this is the type of situation that looks attractive. All right, let's take a look at a couple more bank stocks. So conversely, we're going to take a look at Morgan Stanley. This is one I think somebody brought up yesterday. You know, you've got one here that, you know, this is kind of proving my point here. These are stocks that just don't want to go down, and they've kind of down ticked a little bit here this week, and we're trading up 44.25 this morning. So we're trading up in here. This is that relatively strong stock in that sector, and a stock that's doing quite well relative to what the market's doing. So this is, again, that those guys who do the pairs trades, they kill me, because theoretically, the sector, blah, 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 I'm going to kind of mean reversion these things back to normal, and I'm going to pick up a couple of pennies. A lot of times those guys get whacked for like $1 every once in a while, and then it just defeats the whole purpose of their whole business model. So I'm a big fan of just selling weakness and buying strength, which is kind of the opposite of that deal. I don't think you can go wrong over time doing what I just said. So keep that in mind. Reading what David White was saying in the den. So true. Another one that was very similar to Citigroup, and again, you're going to get these in the scanner. These will be these downtrend resistance trades. So they broke, they're rallying back up into resistance. We spend a lot of time on this algorithm to give it to you in the scanner. A very similar situation. BK. Why not look at something like this relative to the full-blown criminal big horse of the group, JP Morgan, as the short? I mean, they could get fined like $100 billion, but you got to always remember they've made $200 billion on the you know what I'm going to say. So I don't know what could upset that apple cart. License to steal. Legg Mason. So here's one. Obviously, this is something that has just come unglued here, and this will be one I'd be looking at, as a strong play and a buy opportunity at 33.74, kind of based on looking at some other things in the broad market. But again, just trying to prove my point here. Let's take a look at a couple other ones. Bank of America. I don't like these guys either. But again, you might say, okay, well, it can't seem to get through resistance up here. But this is, again, you got better shorts out there. Let's take a look at my favorite stock of all times, Wells Fargo. Again, this is something you probably want to pass on if you're looking at trying to short an instrument in that particular sector. So it says, fundamental news on Wells Fargo today, likely to eliminate 2016 bonuses for the bank's top executives. Wow. Imagine that. They're not going to incentivize people to steal money anymore. Interesting. Interesting concept for a bank. Let's take a look at Boeing. All right, so what do you do with this now? If you're stepping in as an investor and you're just kind of opening up the paper, do you buy this thing? It gave you a little bit of an opportunity a couple of days ago, and this would have been on uptrend support in the scanner. But right now, I'm not so sure what the broad market's going to do. I've talked about the VIX being pretty low here. I'm not just a huge fan of buying stocks right now. I'd rather play let's kind of find things that are showing their hand on the short side and make it a little easier than trying to short the S&Ps here. And we've talked about shorting the S&Ps a lot today, but again, it might be that lottery ticket thing. You don't know what it's going to do in the short term, but at some point, I truly believe we could have some kind of derailment and just catch everybody. It's hard to believe the low volatility right now. That's just completely amazing to me. Home Depot. This is one we've been talking about buying when you get a chance to do that, and gave you a little bit of a dip this past week. Still like this stock a lot. Let's take a look at Coca-Cola. trading about 41.30. We talked about anytime you get a chance to short this stock, please feel free to do it. And we've been talking about this pretty religiously. Now, I think let me see I guess they missed. So 40.51 is the target on this. We're trading about 41.30. I think we've got some ways to go here. And I wouldn't mind doing this morning, just shorting the stock again. Here's 41.64, stops above, and letting it just do its thing on the way down to 40.51. That's not a super exciting trade for guys who are looking for excitement, but boring is good sometimes. Here's Tesla. We're going to talk about this when we come back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. And I think we've got John from Philadelphia. You there?
Good morning, John. How are you today?
Doing okay, man. How are you?
Yeah, I'm in need of enlightenment, hence I'm calling you.
Okay, so let's figure it out.
John, specifically, dollar yen.
Yep.
The dollar priced in yen is currently 112, and thanks for showing that weekly chart on Tiger TV. That's fabulous. John,
Thank you.
I share with you this. I am in a state of confusion regarding dollar versus the yen. It's at 112. I am wondering if there's something that you see that suggests a 5 to 10% move ahead, and if so, which direction?
That's a good question, and I've been thinking about this trade a lot because I really like. I was talking. You probably heard me before. This kind of back the truck up area, 111.67 down here. We kind of talked about that was the ultimate kind of wait and just try to pick it up on sale down here. But, I'm not so sure what the dollar's going to do, the dollar index. And I think the better way to trade this right now is just to kind of look at your kind of looking at the dollar index on one side of the equal sign and the yen on the other side, and just monetarily balance it and be long the yen, or, the devaluation of the yen trade on this chart, and short the dollar. And I think that's probably the smarter way to trade this right now. I think the dollar has a much bigger chance of going down than the yen, and therefore there might be a nice little spread trade there, if that makes sense.
I'm sorry, John. I'm listening closely to what you've just said.
Mm-hmm.
With dollar yen, and one thing I'll just share with you that runs through my mind all the time. When I look at this instrument that you're displaying at Tiger TV, an instrument that is priced at 112 right now, I never, ever call this the yen. This is the dollar priced in yen. So if this instrument heads higher in price, say from 112 up to 118, that's the price of the dollar increasing versus the yen. Or if we just flip it over, that's the price of the yen falling versus the dollar. Anyway, so my question, I've listened to what you've just said about the dollar index and the dollar yen right here. What would if I can pull out from you your thinking at 112, given your thinking, where does this go, the USJY dollar yen?
I'm much more partial towards this yen becoming devalued relative to the dollar.
So that is that to say you expect USJY to increase from 112?
Yeah, I actually.
Okay.
Yeah.
Okay. Thank you.
Yeah.
Got it.
Yeah.
I got it. That's clear.
Yeah.
For me now. Thank you.
But I, again, the dollar index itself with the other currencies combined. I'm not so sure about that. I'm kind of in Tom's camp right now on. Maybe that thing reaching ultimately 96 and a half, 97, somewhere down in there.
Right. Right.
So that's a little bit of a scary situation. I was thinking possibly mitigating this a little bit, with that type of kind of one side of the equal sign type yen against. Kind of balancing the equation a little bit and looking at it as more of a spread trade right now.
Got it.
But it's. Sometimes, just like when I think you had brought up, I think we were looking at in fact, which was a great situation, buying that pound that time, that I was like, you remember that? That was, I think the pound was down at, I want to say 120, something like that.
Yeah. Yes, exactly.
And you were saying, hey, that's when things turn. And I was sitting there with my head in my hands going, oh, God, I can't buy this. This might be one of those situations, and I'm just a little concerned about the dollar and the political things going on, and but I think that spread trade might be in order here. Can we switch to wheat again?
By all means.
Is that possible?
Sure. Absolutely.
Okay. Let me pull that up.
Okay.
Let me switch to Kansas City here. Do you have any new fundamental thoughts on this? Because I hate to say this, but I've kind of fallen in love with this trade, which may be a bad sign when I fall in love with something. But can you review? Is it possible to review some of the fundamentals on why this thing is starting to look underlying fundamental reasons and why this thing's looking technically kind of attractive at the same time?
Yeah, I'd be happy to. Here's the real simple big picture.
Okay.
Wheat prices are off their bottom, but let's look big picture, and thank you for sharing the weekly charts on Tiger TV.
You're welcome.
You're off the lows, but you're still way, way down. Okay, simple reason why. Bumper crops the past 4 years globally. And to put that in perspective, as far as and of course U.S. is part of the global trade, but just to demonstrate with U.S. numbers how the global trade is has been massively bearish after 4 years of bumper crops. And I repeat, 4 years bumper crops globally. So the U.S. numbers are in this position. There's wheat that was grown that's sitting in storage that hasn't been consumed. And the estimates, at least right now, are that come July 1st, when the new crop starts to come in, the stuff left over in storage, from the previous growing season, is 1 billion bushels. That's the estimate for July 1. 1 billion bushels left over. And that's compared to U.S. production of only like 2.4 billion bushels. I think those numbers are right. In other words, leftover supplies, literally half of what you're producing. That is huge. Take soybeans, which is far different. Come the start of the next harvest season, beans left in storage, on the shelf, not consumed from the prior year, only something like 13%. So contrast that. 50% left over for wheat,
right.
13 in beans. That's why wheat is so low. That's why wheat hasn't yet rallied, because there's all this stuff left over. So every time wheat starts to rally, farmers who've got this stuff sitting on the shelf sell it, just trying to get any little bump up in price that they can.
Right.
So that explains why we are where we are. But as Ed Young, former TFNN show host, liked to say, the cure for low prices is low prices.
Right. Can you hang on?
Sure.
Great. Guys, we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology.
Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. We've got John from Philadelphia with us. We were kind of finishing up about wheat. Did you have anything left on that one?
Sure. Let me recap the potential bull factors directly ahead of us. First, from major bear markets, it's very typical for any markets thereafter to, on its first leg up, recover 30 to 50%, pick a center point, 40% off the bear market bottom. So that is what's just typical for major bear markets, and that applies to anything. In the case of wheat, looking forward, we know the current situation is bearish. I described the stockpile factors for you. Looking ahead the next 6 to 12 months, we know a couple of facts. One, the estimate for acres planted in the U.S. is 49 million acres, which is a 108-year low. Just contrast that to 64 million acres planted in 2008. So what we see is the classic Ed Young supply response, where you just can't make any money at this thing. So farmers are saying, I'm planting 49 million acres versus 64, back just a couple of years ago. That's number one. So we're guaranteed to have supply cut a bit. Another bullish factor is the emerging drought, at least presently, past 3 months, in the Oklahoma into Kansas area, which is the heart of the Kansas City wheat belt. Mm-hmm. That's number two. Number three, in the Chicago wheat futures, which is the most heavily traded futures market of the three in the U.S., speculators as a group are still short quite a bit of this stuff. In other words, betting at lower prices. They're often wrong at extremes. And the fourth bullish factor is the cash market over in the world's biggest exporter, and the biggest exporter is Russia, out of the Black Sea area, right on the border of Ukraine. The cash price for Russian export wheat has been steadily rising, not dramatically, but steadily, and that just shows us the supply-demand balance on the export market is starting to tighten up, and at some point we're going to get that 40% rally. And I can't tell you if it's going to be this year, next year, or the year thereafter, but that's what I'm playing for.
Okay, so that being said, and thanks for all that, That being said, if you were to, like, what month would there even be in your mind the best bang for your buck on some type of, not, I guess, lottery ticket type play or spread or something like that on Kansas City wheat? What would, in your mind, be? I mean, because, like you said, I mean, this could be like a year out before the kind of push comes to shove on this. But if you were thinking about, okay, let's try it now, let's keep trying it, because a lot of times, when you put on trades, I mean, looking at automated systems and just statistics in general, if that risk reward is pretty high, then it's kind of a balancing act. Then the winning percentage is usually a little bit lower because and as your winning percentage goes up, your risk reward kind of narrows down. So if you're looking for that big risk reward trade, you got to be willing to say, okay, well, I'm probably going to be wrong a couple of times if I keep trying this to attain that big kind of home run situation. When would you start and where, in your opinion, on even trying to start nibbling at this concept? Like what month and what type of strategy do you think?
Yeah, here's the tactics that I've employed in this market and I've done in others coming off of major bear market bottoms. One,
okay,
just use your pattern work to find low risk purchase opportunities on dips. Buy a position, in other words, and a multiple position. If you're right and not stopped out and it rallies, flip out of part of it, holding the second part, and then just look for pullbacks again. So it's that continual buy the dips, flip out part on a bounce, buy the next dip, flip out the next part on the bounce. If it doesn't head up, you've made a little bit or lost nothing is the kind of idea. So as far as very specific contracts, what the tactic or what the strategy that makes sense to me is use the most liquid old crop contract. And right now that's March, Kansas City wheat. And, of course, within a couple of weeks, the most active will flip to the May, and also do the same thing with the new crop contract, which is the July contract. But the idea is just be looking for patterns, nice ABC dips into support, FIB 50, 60, 62, 786 retracements. Buy those, set your stops. If you're wrong, you don't lose much. If it pops, you let go of part of it, keeping the second part. Just play that game repeatedly. You'll make a little, most likely. If you lose, those small winners will offset the small losers. So you can actually, even before the bull market takes place, make some money, and then you'll be there when the big move occurs. That's kind of my tactic.
I got it. It's really got exactly same technical setup on the July contract. I just looked at it, trading about 464, I guess.
Correct. And keep in mind how much higher the July contract new crop is versus spot month, the old crop. So the new crop contract, those buyers and sellers are already discounting the supply demand to have tightened somewhat. So you want to be sure you acknowledge those future prices are already higher, having already built in some of the profit opportunity you were hoping to get. So you just want to keep that in mind.
Got it. Great dissertation on that. We got about 2 minutes left before we go to break. Can we hit beans really quick? I actually somehow won a bean trade on the long side, which I'm going to pat myself on the back for that. But what are your thoughts? Because I never go long beans. What are your? Do you think this thing can go higher, or do you think we're stopping around 1065, or what are you thinking here?
Yeah, I'll share this with you. Until proven otherwise, every good dip, buy it, because Chinese demand is record high. When the Chinese demand no longer is record high, I cannot tell you. I was just sharing some ideas about copper in the tiger's den, about how people in China are great mercantilists. In other words, the trading game, they'll beat you every time. Just a quick example. from the March soybean contract high. I think that was January 18th, up at about 1080. There was a slip, fell all the way back to 1020. And if you look on your charts, the big dip was January 30th, the Monday. That's when the Chinese were on Lunar New Year holiday, and they pulled their orders in the futures market and bought the cash when it dumped at 1020. So they're in there buying every dip. I suggest following those players.
Thanks very much for coming on today, John.
Hey, John, thanks for your help on the dollar yen.
Thanks. You're welcome.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. Just incredibly good information coming from John there. I learn something every time he speaks. Want to shift gears into Under Armour here, and we talked about letting somebody else figure out the low print down here, not trying to catch a sword. This is a stock obviously in the news. They found a great way to repackage the 80s spandex lycra movement, but now this is what's happening. Okay, so we, again, this is not good news for this stock, having a profile appear above price action. I think this is what last week and a half ago this happened. So we're coming up into 2136. Now, the way that I'd like to play this, if I was forced to, would be to just, you could look at this like, wow, Logan always says this is a bearish situation. Yes, it is. The only way to get long this, the only way, in my opinion, to get long it, the only way to nibble, to even try to trade some kind of retracement on it, is to wait until we get a daily close above 2136. Then you've got this kind of reverse back into the meaty part of the bell curve. A lot of times it wants to be explored. And then you might have a chance to use that as support to move higher into 2320, but that's it. I mean, that is the only way. I mean, it's hard to short these things down here. I talk about things when the lows go lower a lot, and this might be one of those cases, but the only way to nibble, now that you've got a kind of a line in the sand here, is to get a close above 2136, use it as support, play defense, of course, and then that's your target. Your risk reward probably would be pretty good. 2320 up top. Doesn't have to happen in one day, but that's the way that ball bounces. Let's see here. See if anybody in the dense. Okay. All right, so that's the deal in Under Armour. Got about 2 minutes left here. We're going to take a look at Humana. All right. So decent news out. They've also got some news out that some dismantling of some former deals. You guys can read about that. But here's the situation on Humana. It's trading about 200 right now. You got some resistance up here at around 202.97. I wouldn't get too mega excited about this. That's resistance on Humana. It's been kind of trailing down. There's a lot of uneasiness in that sector, and God knows what's going to happen with all the readjustments of the Obamacare. So that would be, again, a trading opportunity around 202.97, 203 for Humana. Let's do a little recap here. Got about a minute left. S&P is tough to short up here. I'm still hanging on a couple of lottery tickets. Oil, it's very impressive how this thing kind of reversed back above the weekly unfair highs. I'm looking at the dollar possibly coming off. That would bode well for a lot of these commodities. Gold, don't short it. If we do get by Friday, get a reversal down here, weekly close below 1236, then that would be kind of promising to look at it from the short side, but not now. Can't buy it or short it as of right now. The dollar came right off that number we talked about yesterday and the day before, that 165. Might be looking at this, two different ways on the technical side. Could be kind of staging to move higher, based on coming down into this pretty ripe opportunity. But I'm not super excited about it. We talked about a yen dollar index, a yen dollar index spread earlier. I think that's a decent little opportunity there. Take a look at it. Just balance both sides of the equal sign monetarily, and that's your spread. Guys, stay tuned for Larry. You will enjoy it.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.